Okay, I have 5 things that I see a lot of brand new business owners make as a mistake when they're first starting off. Hi, I'm Kelly, and I help small business owners figure out how it is they're supposed to live a life untaxed, personally and professionally. So, the very first thing that I see a lot of small business owners make a mistake when they're starting off is they mix their business funds and their personal funds in the same bank account. This is a really big no-no. Why? Well, particularly if you've taken the time to create a separate legal entity, if you then take business funds that are supposed to be going in through a business entity and personal funds, and you mix them together, you've pierced what we call the corporate veil. And the problem with that is that whatever liability you thought you were protecting by keeping this entity in place, you've definitely mixed that up and it's not going to be valid. The other problem with mixing your business and your personal money together is that it makes it really hard to figure out what was business and what was personal. And particularly if the IRS looks at that, they're also going to have a hard time figuring it out. And so the onus is going to come on you to prove that it wasn't personal expenses when you're saying it was business expenses. And that brings me to the second thing I see small business owners make a mistake. Number 2, they don't do any bookkeeping. You know, if you're running a small business, even if it's a side hustle, and you think, I'll just figure it out later, guess what? I don't remember what I did last week. So I definitely am not going to remember what I did 6 months ago. So even more so, if you don't have your business and personal funds kept separate, it makes it really difficult to remember what it is you spent money on and what was business and what was personal. And so not doing any bookkeeping also leads you to not be able to plan for absolutely anything when it comes to figuring how much money you made, how much money you spent, and how much money you're going to have to pay taxes on. And ultimately, that's probably what most people are concerned about, and they forget about that until way after the fact, and then they're stuck wondering why it is they owe a bunch of taxes and they never made a plan for it. So, number 3, not having a plan. Well, if you don't have a plan for how it is that your money is coming in and your money is going out and how much is left over and how much you're supposed to be taking in deductions in certain categories, you're flying blind. Even if you're running a side hustle, it's really important that you understand what the plan is and how much money you made so that you don't get caught owing taxes at the end of the year. It sucks. And most of us don't want to be in that position where we owe unnecessary taxes. And a lot of times what I see happen is business owners generally don't even know that there are certain things that they were able to deduct, but they really didn't have a plan. They don't have good bookkeeping, and now they're just sort of scrambling to figure it all out. And most of the time when that happens and they're disorganized and they don't have everything together, they generally leave money on the table because they don't have all of the things together. Number 4, not making estimated tax payments. So if you're in any level of self-employed situation, so even if it's a side hustle or you started a new baby business and you don't make estimated tax payments throughout the year, sometimes the IRS is going to give you like a get out of jail free card in the first year, but most of the time you're going to pay a penalty for not having paid the proper amount of estimated taxes. Now, this isn't for everybody, and this is why it's important to understand your personal situation. Some people aren't going to have to make estimated tax payments to the federal, but they might have to make them in the state where they live. It just depends on where you are in your business, how much money you're making, and how much your other sources of income are. And all of those things together is going to figure out how much money you're going to possibly have to pay in taxes. If you don't make those estimated tax payments at the pre-prescribed places during the year, there's 4 times a year where the IRS says you have to pay us estimates. If you don't make those estimates, they're going to penalize you. They're not just going to penalize you for not making the payments. They're also going to charge you interest for having not made the payments until later. So this isn't really a time, particularly when you're starting out, where you want to lose money by having to pay unnecessary fees and penalties and interest on something that you probably were just going to have to pay anyway. So don't do that. And the 5th thing I see small business owners really make a mistake, and this is generally in the early days when they think they're kind of doing it all themselves, is they don't have all of the proper accounts or licenses or things in order before they start running. So depending on the state where you're at, some states have very strict rules about what businesses can do, and you might need a locality to give you a business privilege license. You might need a sales tax license. If you have any level of employees, you might need proper withholding numbers and account numbers for the various entities, and you have to pay taxes at certain periods of time. And there's a whole host of things that most small business owners really don't know when they're getting started, but they still go out and do it. And then unfortunately, the penalties for not doing this are so expensive on the back end. So these are my top 5 things that I see most small business owners making a mistake when they're first starting out. And my goal is to help give you more tools to help you start off on the right foot and live a life untaxed.